Good afternoon, everybody. Welcome to Trader Merlin. It is your Wednesday edition, hump day, a better day today. After yesterday's disappointing trade, today was actually a good one. We had a great breakout from the opening range breakout on the S&P, ripping to all-time highs, which of course we will talk about today. Yeah, it was a good one. It's good market to go to all-time highs today. And we talked about yesterday, there's a lot of pressure by those higher lows pushing this to the upside, and lo and behold, we got the breakout. Margaret, this is AI for you. I said, give me a picture of the Federal Reserve, having a meeting, and I think that there might be one woman in here, although she looks a little masculine, but yeah, all old white dudes. Nobody of color, nobody of different ages. One of those AI algorithms just pointing at stereotypes there. But anyway, and plus there aren't even, I don't think, this many members on the FOMC. Anyway, the topic for today is inside the Fed, and one thing I look forward to, obviously, is the rate announcements. I love those announcements. Our next one is going to be November 7th. I think they provide an incredible amount of intraday volatility, but it can be, challenging for those that aren't quick on their keys and have their stops in place. The second part of the FOMC day, which of course is going to happen November 7th, we're excited about that one. It's a different day than normal. Usually it would be on a Wednesday. This time it's not. But you get the press conference afterwards where Jerome Powell will say some things, and occasionally he slips up and gives us a little bit more insight than maybe he wanted to give us. The meeting minutes, though, are basically a summary. I wish it was live transcription so we could really hear what they're saying, but it's basically someone takes those, they probably put it through AI, summarize the statements to give a general consensus of what happened at that FOMC meeting. And this time I thought was pretty interesting. I always look at it because I want to try to gain an understanding of what's the next play. If you look at what we do as traders and investors, if you look at this as a chess game, it's about knowing all the different pieces. And not only is it about what you're going to do with your pieces and your strategy, but every time your opponent moves a piece, my strategy might have to change. Certainly it could stay the same, but sometimes it might switch just a little bit. And I think we need to look at it that way, that the Fed is your opponent on that chessboard, or external market forces are on the other side of that chessboard. So today when we got the FOMC meeting minutes, of course, I read through it. If you guys would like a copy of the meeting minutes, I'm happy to drop it into the chat here. You guys can all have a copy of that. It's at the FOMC site, but if you want it, just type into chat and I'll drop it in there for you. It pretty much summed up what I was thinking, although it gave me three different areas to maybe focus a little bit more on with regards to data, because as we know, everything is going to be data dependent with the Fed. So let me run through my quick takeaways, my summaries from reading the FOMC meeting minutes so you don't have to, and then maybe we can have an open discussion on what you guys think might be the next course of action here. So I'll start with the first piece. The first piece is very simple. Most of the governors, all the voting members, said that they see policy as restrictive. Now, I think that this is such a simple sentence, but it's also very important, because restrictive implies it's slowing things down. Right? Would you all agree that if I said something is restricting the markets, that it would be slowing it down from further growth potential? I'm pretty sure you would all agree with that. If not, type in a chat. I'd love to hear from you. So I find this interesting where the Fed is in a situation where they feel policy is restrictive, meaning they feel it's slowing things down. Yet when I pull up a chart of our market here, here's the S&P. Let me get the volume off of there. You're looking at gains since August when really liftoff. Well, liftoff happened way before that. But to where we are today, you're looking at gains of 15% in our equity markets in just the last couple of months. I don't know about you, but that doesn't seem restrictive at all. That feels like this is just fueling these markets. Now, we can take it one step further. So this is hourly. I should have been on daily, my bad. There we go. If we can take a step back and look at going all the way back to these low points here from 2020. Granted, we were not cutting back then. We'll move it back to where we're cutting, but we're still up 168% on the S&P since the COVID lows. Now, let's go and real quickly look at the FOMC meeting, the FOMC data here, because I want to pull up exactly what I'm going to reference here, which is, here's November 7th. We'll go look at the FOMC rate right here. When did we go to liftoff? That was officially March of 2022. So I'm going to use that as my access point to give me this data reference. March of 2022, which is roughly there, okay? Now, from that point, we're still up 28%. Granted, a majority of this happened back from 2000 to 2022, sold off a little bit, and that's when they started to raise rates. Okay, fine, we did that aggressive raising. All of that is still showing me an economy and markets that are performing rather well. I thought that was, the very interesting comment to see this policy is restrictive. Now, if we go to where we peaked out at, where were we maxed out? They're calling this 5.5% to 5.25% as restrictive. Well, that we peaked in July of 2023. So let me readjust this to July of 2023. There's November. There's July. Since July of 2023, we're still up 27%. Yet this entire time, the Fed has said that most see policy as restrictive. That to me seems confusing and does not make sense. If policy is restrictive, then the market should actually be going down, economic data should be going down, and things should not look very good, right? You're trying to slow things down. So that was a weird one. Anyway, that's just the first piece. Next part of this from a takeaway perspective was that all participants said it was appropriate to ease. So basically all the voting members said, let's cut rates. If the economy improved as expected, turn to a more neutral policy stance. Now, this is one where we have ambiguity. I'm going to ask all of you to type in a chat what you believe the neutral rate should be, right? What should a quote-unquote neutral rate be? Remember, a neutral rate means that you're not seeing money going into investments, you're not seeing it pulled out of the markets, everything just kind of stays the same. Neutral is where it's not impacting the market either way. The market's doing what it's doing just because of natural forces of supply and demand. So what number on the Fed funds rate would you say is quote-unquote neutral? And the reason I say it this way is if you look at where we are today, we are right now between 4.25% and 5%, 4.75% and 5%. That's where we currently are. Now we'll look at a lot of different estimates here as far as where we might go in the near future. Right now there is a 78.8% chance we get a 25 basis point cut on November 7th. So Big Eb says a 5% Fed rate. Okay. Interesting that you say 5%. That's you're seeing a lot of people say between 4.75% and 5% is normal. That's your normalized rate. So I kind of scratching my head here, going, wait a minute. If the comments that were made in those FOMC meeting minutes say if the economy improved as expected, turn to a more neutral policy stance, I'm with Big Eb. The data and the market and the comments released from the FOMC over time has said that between 4.75% and 5% is a neutral stance. That's kind of your normal level. Now, of course, that's going to depend on economies. Like, what's the economy look like? I see Scott here says 3%. That's a little low. I think 3% is a little low than historical norms. Let me see if I can bring up, I know I can bring it up for you. What we have, unfortunately, is an extremely distorted view here, right? I think you'd all agree with these wild fluctuations. It's hard to say if we were to do a smoothing average over time, what would it be? And unfortunately, I don't have the computer set to do that, but I would love to take the Fed funds rate and add like a 20 period moving average to it, or maybe a 200 period moving average would be even better. And just to see what that might look like over time. That'd be a really cool thing if I could add that in. And I probably can on, let me see if I can do it on this one. Fed, I wonder if I can do Fed futures. Fed futures, 30-day federal funds futures. Let's try this one. Yeah, no, that's not going to work. Anyway, I was hoping I could see what the average number is. My assumption would be it's between 4.5% and 5%, which doesn't give us much room to be cutting here. And the reason I put this in this discussion today is these are the people who are making the decisions, and they're saying return to a more neutral policy stance, which implies further downside movement. And that makes me wary. It feels like we've got a football field, but the goalposts keep moving depending on who's playing that game. So I don't think that's going to change. Let's go to more takeaways. Next takeaway was a few said 50 basis points would be more predictable. I thought this was rather interesting. So you had some people not dissenting, right? They didn't go against it, but they made the comment that, hey, 25 basis points is probably the better way to go. It's a bit more predictable, which of course is what I was predicting, and I was wrong again. I still think 25 basis points is the right measure because it's a simple, small, incremental cut in rates, and therefore you can measure the impact of it much more efficiently, and there's less shock to the system. one of the comments that was made was that this, doing 50 basis points could cause a little bit too much shock. Well, it really didn't. Almost everybody saw a diminished risk to inflation and downsides to unemployment, meaning unemployment getting better. So all of these are actually very good comments. These are all things I think look good on paper. I've got a couple more, and then I'll get to the worry spots here so we can start to think about actions for our portfolio. A substantial majority of the members wanted a 50 basis point cut. So that doesn't mean everybody. And I think that was one of the more notable pieces for me was not everybody wanted it, but the substantial majority, according to the FOMC meeting minutes, wanted a 50 basis point cut. Several noted that 25 basis points would have been in line with the gradual path of policy normalization. I guess I've fallen into this camp here. Now, there's one other interesting part here. It has been a long time since anybody on an interest rate policy decision from the FOMC has dissented and said, nope, I totally disagree. I don't want to go that route. Generally, they are all in line. Michelle Bowman, one of the governors of the FOMC on the FOMC board, said, I'm voting against a 50 basis point cut. Now, just as a useless trivia for you, how many years do you think it's been for the U.S. since we've had someone dissent and say, I'm not going to go with that. I'm not casting my vote for that cut or rate increase, whatever. How long do you think it's been? We're here in 2024. Yeah, I'll let that one stew for a second. Anyway, Michelle Bowman saying 25 is better. Now, here is the concerns. These are the three big pieces I think that we have to pay attention to, because this will tell me which data is more relevant, which ones I should focus on. It's been 19 years. It was 2005 was the last time someone dissented. Now, I didn't find the date on who that actually was. It was just kind of written in there, and I thought that was very interesting. 19 years, everyone's been in agreement. Yes, sir, yes, sir, yes, sir. And now, or yes, ma'am, right? And now we have all of a sudden dissension. So bravo, Michelle, for not feeling you had to go through the standard agree with everybody. I think I'm surprised we didn't see more people go with 25 basis point. Anyway, so here's our concerns, or at least my concerns that I pulled from that FOMC meeting minutes. What is going on with my... There we go. Number one, cooling of consumer spending. So if several members of the FOMC meeting have talked about the cooling of consumer spending, obviously there's a couple numbers I need to look at. Number one is going to be the consumer spending data that comes out each month. Of course, we can check that on the economic calendars. The other is going to be retail sales. And I brought up retail sales quite a bit. The numbers for retail sales have actually not been bad. They've been okay. The recent number was actually higher than expected, although historically it feels a little bit lower than normal. As we've mentioned many times, we are a consumption-driven economy, and we must spend money, right? You got to go out there and spend. I did my part. I spent like $500 today just on Halloween decorations and stuff I just didn't need. Hey, who needs a 16-foot inflatable movie screen for the backyard? Yeah, I'll buy one of those. Who needs a 20-foot black cat in their front yard? Yeah, I'll get one of those. When it comes to Halloween stuff, man, I am supporting our economy big time. Of course, I'm probably supporting China in that, since most of it's probably made in China. But anyway, cooling consumer spending becoming of a concern, and I'll focus more on that, because I think that is a sneaky problem most people aren't looking at, which could get much worse. Why much worse? We look at things like the longshoreman strike was going on, is kind of tentatively settled. But I am kind of with Don Fron with the belief that AI is going to start to replace more and more jobs. And I think that the unemployment numbers are going to start to increase, which in turn will lead to less spending from consumers. Now, if you're a smart consumer and you're making less money, you spend less. If you're a dumb consumer and you're making less money, you use credit cards. So we'll look at consumer credit as well and see if that continues its upward trajectory. Do you hand out whiskey shots to your front door? No, I don't. I spend a lot of money. I'm over $200 I spent just on candy this year. And it's funny, my neighbor across the street doesn't put up one light. That guy doesn't have to spend a penny on trick-or-treaters, man. Nobody comes to his house. He's just a grumpy old man. I'm just a bitter old man, but at least I hand out candy and try to scare children. That's what I do. It's funny you mentioned that, Margo. One of the things I saw recently, some of you may have seen this, there's two pranks I witnessed recently regarding Halloween. One is this mom takes whole onions, and dips them in caramel on a stick and puts them on the counter, and the kids think that they're caramel apples. And just the video of the kids eating these apples, priceless. The second one, those Ferrero Rocher candies, little gold ball candies, which are just delicious. This lady would take those out, grab a Brussels sprout, dip it in chocolate, and put it inside the wrapper so people would open it up and just bite into a Brussels sprout. I mean, trick or treat. There you go. Anyway, nice tangent there. Let me see. When a rate gets adjusted up or down, doesn't it take a while to really produce effects in the market? Feel like we haven't gotten the full effect of the higher rates and are already cutting back. Yeah, MT, I'm totally with you. My mentor back in 1998 always told me that too, and I do believe there's a lag time. He would say between 6 and 9 months. Others will say between 9 months and a year till a rate cut. So the one we had in September, we still got like 6 months to go before that even starts to hit the economic data. Now, from a trader's perspective, we're much more anticipatory, right? When we hear a 50 basis point cut, we're like, buy the market. Because over time, that should reflect in cheaper money for borrowing, therefore more investment into companies, growth for companies, employees make more money, employees spend more money, and that cycle continues. So we see that announcement, snap the fingers, you're buying instantly with that long-term forecast. But the reality is we don't know exactly what the impact will be. It's expectation, it's economic models that we've used in the past to calculate out that data. So who really knows? That September cut we had, I don't think the market's felt that yet. I don't think the market's going to feel that one for a little bit. And we'll see in the economic numbers. And when earnings come out and we start to see inventory stuff and what's really going on from a supply-demand perspective, those interest rates are one component. But really, overall demand is the bigger driver, in my opinion. So yeah, I'm with you. Those rate cuts and increases take time to get through that system to the bottom line on your financial statements. Big Eb says AI has to replace jobs to some extent, or the investment is not worthwhile. Correct, absolutely. And if you look at how much money they're spending on AI, they're gonna replace a lot of jobs. I saw a video. So when we talked about that longshoreman strike, I thought this was very interesting. And Chris, one of my crypto students, he's actually a longshoreman out of Long Beach. They didn't strike; they're a different union. And one of the Long Beach guys just showed a video, and he goes, they're talking about no automation on these East Coast longshoremen. He says, "Look at our yard," and he just pointed the camera around, and it was really what I was talking about. Everything was automated. He goes, look for a person on the ground. He goes, you go back a few years, there were people all over the place. He goes, now I barely see anybody here. It's like, wow, that's interesting. So I think that's what those longshoremen on the East Coast are fighting for, is pushing back on the automation. But if I'm an import company or whoever's running those docks and I put in a giant new crane, I'm going to try to do it fully automated with new systems that are more efficient, faster, 24 hours a day, don't cry, don't take union, don't need a 401k, none of that stuff. Yeah, we're going to go there. It's just a question of when and how long will it take for us to feel the impacts from that. And that might be something over the next 2, 3, 4 years that really starts to be much more relevant discussion. I think we're still in the early days of it. But hopefully if I'm still doing this show in a few years, we'll revisit and go, you guys remember when we talked about AI kind of taking over jobs and robots? Could be coming. Let's see what else I have here. Merlin, do you keep the decorations from year to year, or do you give them away after Halloween? Oh no, Mike, I keep them. Absolutely. Yeah, some of them burn out. Some of them, just stop working. I noticed I have a giant Beetlejuice worm. The worm from Beetlejuice. I've got a giant one of those, and it's already got holes in the fabric, so it's might be on its last legs. But yeah, I literally bought a storage shed this year because I have a lot of space taken up with Halloween decorations. I probably have, I would say, close to 20 of those black totes from Costco, the big black totes. I got about 20 of those that are just solid Halloween decorations. And that doesn't include the DJ lighting and things like that, which is another 5 crates. But it's fine. We all have our vices, right? We all have our vices. Mine's Halloween. It's because when I was a kid, we always go off on tangents on this show, but when I was a kid, obviously having a birthday that's so close to Halloween was my day. It was kind of when I had parties with my friends, and I've just kind of always had that belief that Halloween is like my birthday. So my mom, who was a hippie at heart, and so was my dad, my mom was much more creative, my mom would go nuts on Halloween for costumes. And she'd be like, what do you want to be? And I'd say something, and my mom would make it happen. And I mean, I had some crazy costumes. My mom would spend hours and hours sewing. I remember one, she took She went to the Goodwill with me, and we picked out like a dozen ties, men's ties, colorful, all kinds of crazy ones. And she made me this amazing jester hat, which I hope I still have somewhere. But yeah, I've always been a Halloween person, so I will keep building and building and building. I'm going to be that guy who's like 95 years old, sitting on my front porch, scaring the crap out of kids, and laughing the whole time I'm doing it. Why? Because I can. I got a short time on this marble. Have some fun while we're at it. Just do good and make people happy. That's the best thing. Let's see. It would be interesting to ask a mortgage broker that same question. Margaret, when you talk about interesting to ask a mortgage broker that question, to which side? I mean, a mortgage broker is always going to have a job. Why? Because people always need a place to live. They're always going to be buying shelters. So that's something that, regardless of your income, is not going to change. Whether it's government paid for housing, which who knows may happen down the road, or you're paying it. Mortgage broker always have a business. So I'm curious what you want to know about the broker, what a broker might say. Because I have broker friends, and I'm happy to see if I can get one of them to come on. I'd love to bring a broker friend on the program. Why not? You need to show us some photos of your decorations. Okay. What I'll do is the decorations are boring during the day. What I'll do is I'll show you a video. Maybe I'll do it tomorrow. No, tomorrow we got a good day. So maybe I'll do it on Friday's show. I'll show you last year's entryway. And it's okay. It's fun. But I'll show you that tomorrow. How long to see results? Got it. Thanks, Margaret. Thanks for the question. Yeah, that is a good question. They see it right away, right? They're the ones that are on the front lines of seeing the impact immediately. Why? Because if you lower rates, that's certainly going to have an impact on the whole bond curve. And of course, that 10-year could be impacted by that as well. And that's something that we focused on here. Today, you had another move up in that 10-year. Let me bring it up here. Look how quick that 10-year has been surging. Screaming up again today. And we talk about hitting that downward trend line. We're pretty darn close to it. I mean, we saw another 1.3% move up today in that 10-year. We're at 4.07. I don't know what the rates were just a couple weeks ago, but if you go back just a couple of weeks to, say, mid-September, we've seen a 13% increase in the yield. Now, that doesn't mean that 13% fewer people are going to be missing out on mortgages, but it does mean that increase is, if you qualified for let's say a $500,000 loan at 6.25%, you're like, okay, I got it. And now all of a sudden interest rates are 7%. You may not qualify for that depending on what your numbers are. So it will start to price some people out of the market and again creates an issue with affordability. But yeah, I'm sure a mortgage broker would feel that right away. Let's see. Did you ever dress as Merlin the Magician? Yes, I did. Of course I did. Hence the name Merlin. What's my brother's name? Mason. Mason's my brother. How long to see results from the rate cut? Okay, got it. That. Blur out the address. You're an internet celebrity. I'm not worried about that. I'm no internet celebrity, man. Come on. I'm not a celebrity. Maybe a celebrity to you guys, but I don't like to think I'm a celebrity. I'm just some guy that talks markets, trades, and builds content. Mortgage interest rate went up by 50 basis points the last 2 weeks. Right, Big Eb, and that's going to have an impact. I mean, that's big time. Merlin, do you think Bitcoin will benefit from Chinese stimulus? I think Bitcoin's going to benefit from a multitude of different things. I think that I mentioned yesterday, and I know someone will probably disagree, I believe that the government will do as much as it can to continue to sustain this economy, and that's going to be by taking on more debt and just keep pumping out more debt. At some point, those chickens will come home to roost, and we will not be able to make the payments on our debt. At some point. I don't know if that's 2 years out, 5 years out, 10 years out, but that curve cannot be sustainable. And at a certain point, people who are lending money to us are going to go, nope, no, you're already way too leveraged. I don't think I'll ever get my money back. So, yeah, I think that is the biggest fuel for Bitcoin right there, plus global regulation. If you look at what's going on in El Salvador, their economy is all of a sudden doing very good, and it's become kind of the shining star and the crown jewel in the hat of Bitcoin adoption is El Salvador. And I really think that by next year, we'll start to see other countries come on board with that. Okay, so that was my first area of concern. Second area of concern. The pace of hiring was not enough to stop unemployment from rising. So we looked at the unemployment rate, which, 4.2%. Not bad. That's okay. We're good with 4.2%. Again, 5.5% is what the Fed told us years ago. And I can actually bring that one up for you so you can stop looking at my ugly mug. Let's go up here and go to that first week. 1 second, should be the Friday the first Friday of the month. There's your unemployment. That's Canada. Let me, I got no filters here. Oh, there's the first Friday of the month. That was one off. So you go here to the unemployment rate. Yeah, we're ticking up, but this is no big deal. Really, it's not that big of a deal. I think what's more concerning in that statement that was made was the pace of hiring was not enough to stop unemployment from rising. So yes, unemployment's rising, but the jobs just aren't there. And with more automation, more innovation, those jobs will start to disappear. And there'll be more and more job loss, less openings, and this number will continue to creep up. That, I think, is why people were so concerned and why they said, let's do a 50 basis point cut. Now, will a 50 basis point cut create new jobs? Possibly. But I think the bigger discussion in the future is going to be AI and replacing human elements in jobs. That's probably going to be a bigger problem, in my opinion, than interest rates going forward. But who knows? We shall see. And the third piece that I found as a major concern, we are all on board with this one, is the upside inflation risk due to geopolitical events. Now, I thought this was interesting as well because they did not cite an increase in commodity prices due to supply and demand. It was just geopolitical events, more international stuff, meaning a direct comment towards what's going on with Israel and Iran, right? Middle East tensions, cost of oil goes up, and we see those types of surges. I was surprised that they didn't address the US dollar, and I was also surprised they did not, because let's look at that dollar index. Here is your Dixie. I mean, Howsers, we were coming right up that 103 mark, right? That 103 mark is where we said that's probably your next logical stopping point. We'll see if it does stop there. Right now, still looks incredibly strong right now. And for anybody who was short that yen, going long the yen, you're getting smoked right now. This is a real quick about face. That was a pretty big change in that trajectory of the Japanese yen. It's moved to the tune of almost 7% in 18 days. That for a currency is a giant move. So the dollar index for me is one of the major pieces. That's the DAX. Dollar index, one of the major issues I see going forward. But then you look at those commodities. Right? It's hard to look at what's going on and not focus on things like wheat, orange juice. Not so much on soybeans. They've actually dropped over the past couple of weeks, but it has been a pretty nice run up. Coffee. I mean, the trend is your friend to the bend at the end. Coffee's going higher, folks. Your caffeine addiction is going to get more and more expensive. That's a trend that doesn't look like it's going to break anytime soon. You look at things like corn, right? Corn's had a huge jump up. Cotton's been trending slow to the upside. You got lean hogs, which gapped down huge, but all of a sudden surging back to the upside. You've got live cattle. Oh man, I just got my grocery store ad today. $8.99 for a pound for a ribeye steak. Killing me. And what do we got here? Sugar, right? How sweet it is to be long sugar. Granted, you got a nice little pullback here, but these numbers have not factored into our CPI calculations or PCE price index calculations, and I don't see why these elected officials and our central bankers have not addressed this and said, hey, listen, we've seen these commodity prices surge. Granted, that's going to have an impact on inflationary data. However, we know real estate is the number one piece in that, so that'll be the other factor. At this point, it's all data-driven. I love this graphic. This is one of my favorite AI ones. I kind of like this. The world just kind of pulling apart. It's just currencies just flying off, although you can't tell what currency they are. But I think that the FOMC meeting minutes, which, again, I spent 30 minutes going over it here today, love it. I think it's a nice window into what they're thinking. I was really surprised to see dissension. You don't usually get dissension in that, but most of the people agreeing 50 basis points, I believe that was just go with the flow, let's just do something. Now I think you're starting to see the tenor, the tone from them say maybe less going forward. And to that note, here's what you have for November. Right, November, there was no chance at all a couple months ago that we were going to see no change. Right now, it's a 21% chance we may see no cut at the November meeting. That's new, right? That was not on the radar at all. Now you have a 78% chance of a 20 basis point cut on November 7th. I think we'll probably get that. I'm in that camp, and most likely we'll get a second one at the end of the year. Now, what's really weird is if you look at this, not really weird, but it's 65% chance that we're going to get 25 in November and 25 in December, which goes back in line with, I think, many of you have stated that you really think that it's going to be 25, and I think that's pretty much where we're going to get to. How do they calculate those probabilities? So it's done off, there's Fed funds futures contracts where you can actually buy a futures contract that expires on a certain date, which tells you what the price is. So you can bet it's going to be this price or that price. Kind of like you can buy an S&P futures contract, and it's going to deviate in value over time. But think of more like an option where, okay, I think it's going to be at this price on this date, and that's the future product. So there's speculation based off of which contract is being purchased the most, and which contract is being purchased the least, etc., which one has the most interest. That's where they think prices will end up going. I think that's how they're calculating. The exact calculation, Margaret, that I do not know. You are a price professor for food prices? Well, I definitely am I'm a weirdo when it comes to food prices. Let me ask you this. Does anybody else do this? So I think that there's two types of people. There's the people that will go into the store saying, I've got this list of food items. I'm just going to buy it. I don't care. I'm not even really looking at tags or anything. Just grab this, grab that, and I'm out. Then there's people like me where I'll shop at Vons or Stater Brothers. I have the Vons app on my phone. And when I go in that store, I immediately go to the deals app because you can only get these deals on the app. They don't exist anywhere else. And these deals are huge. I go through the deals section and I'll just click on produce. And it'll give me everything that's on a wicked deal on produce. And I'll go, I need broccoli, I need some carrots, I need some apples, I need some oranges. And I'll buy that produce and I'll build a meal around that. Then I'll go through and say, meat department. Click on it. What's the best deal there? Last week when I shopped for groceries, I saved 39% on my bill. At the end on Vons, it's awesome. They show how much you would save by using these apps. And how many of you are to that extent on your bill? You're literally you're looking and making a concerted effort to use apps and coupons, if you have them, to knock as much as you can off of your bill. How many of you are doing that? I should have done a poll for it. If you're not doing it, you should. I mean, think about it. If you spend $100 on groceries a week and you save 25%, you save $25 a week. And it just keeps adding up and up and up and up. Jason says, I shop at Aldi. Yeah, we don't have an Aldi around here, but Aldi's cheap. Aldi's real cheap. Yep, Aldi's very, very cheap. Yeah, I'm surprised. I talk to some friends and they laugh at me. They're like, oh, you're wasting your time. I'm like, actually, no, if time is money, then I'm actually not wasting my time. I'm actually doing pretty good with it. So, somebody says, I have a budget. I like coupons and I like doing the math in my head to see how close I am to my budget. I like that. Having a budget is good. Been trying in the last 2 months, Big Ab. I'm always looking for the deal on everything. Yeah, you and me, Big Ab. We're gonna get along, but I'm always looking for it. It's funny because if I look at like meat, for example, obviously I'm a meat eater. I love a good steak. I've been waiting for like ribeyes or porterhouses to go on sale, even New York's to go on sale, and I'll stock up and I'll buy a few pounds of them. But I'm not spending right now in porterhouse. It's like $14.99 a pound. They had them on ad a couple weeks ago for $6.99. Oh yeah, stocked up then. Always looking for that deal. All right, let me go into a question that came in. Michael G says, NVIDIA breakout today. Is it going to 150 by the end of the year? Man, what a nice day today. I had a great trade. Well, I wouldn't say great. It was an easy trade compared to yesterday's little whipsaw. Today was just opening range breakout. Look at that, 15 minutes. I outlined the high, low, buy the breakout, and yeah, set a target at the all-time high, and perfect. I left a little money on the table, but it doesn't matter. Let's go to NVIDIA to start, and then we'll go back down the number line here and check out the other markets. So NVIDIA, right now you're at 132.65. We had this little dotted line drawn on yesterday, which is loosely kind of the high point of this consolidation we saw in mid-August. Ascending triangle, it broke it yesterday. A little bit of a dip retest, I would say, right now. Question is, does this 131.50 line hold? Do I think 150 by the end of the year? Given the euphoria around AI and NVIDIA and the chart itself, it does feel like we'll be at 150 by the end of the year. Obviously, I'm no oracle. I don't know where it's going to go, but I'm just going with the trend is your friend till the bend at the end. And right now, that 150 looks very nice. And I could certainly see it get to that 150 line. So I just put that 150 line on there. I'll get rid of this other horizontal line. But this chart looks fantastic. I mean, yes, it stalled a little bit, but now I think you'll see it challenge its all-time high, which is from back on the 20th of June. It'll probably challenge that. Its all-time high was 140.76. After that, boom, just rip to the upside. So yes, I think 150 by the end of the year is certainly doable. Absolutely. And it wasn't just that. We talked about those FANG stocks, right? We talked about weakness in Google. Well, Google came in a double top, and still showing more weakness here. I think a lot of this has to do with that lawsuit. We had Tesla, which came into that double top as well. It sold off 1.41% today, just kind of sitting here consolidating. I do like that 226 mark, which we've mapped out a week ago. Meta, still looking strong. NVIDIA, you had to break out today. Microsoft, okay, which is one of the laggards really just because of what's been going on. A little bit of an upside move. And then Amazon, which got that downgrade. I was really hoping it would have dropped more so I could have bought some down lower, but did not get my opportunity today, up 1.36%. Of course, Apple still in its pennant formation here, ripping towards that upward line there. So all in all, pretty darn good from an equity market perspective. And you look at our broad market indexes, I'll do the top 10 here, top 8. Bitcoin, we had dropped today of 2.06%. Again, I don't think that we'll get below 160. I mentioned the other day, I don't think you're going to see price get to 160 again. Let's see how quickly it proves me wrong. But there's your maybe it's because of the release of the creator of Bitcoin on HBO. I still haven't watched it. I don't know if anybody here watched the special last night. They did a documentary on who is the real person behind Bitcoin. I'll have to watch it. Well, I guess you can ruin it for me because I'm still going to watch it anyway. But yeah, I'm curious to see who that is. Maybe that's why this one dropped. Who knows? Either way, it's been making this downtrend here, which is lower highs, lower lows. I was fairly optimistic with what happened here on the 27th of September because we broke a most recent swing. But now all of a sudden, a little weakness coming back in. So hopefully it will grab a footing and start to move back above that 67,220 mark. Is market suggesting Google will split? Let's go to... So I don't think the market's suggesting that Google will split. Typically, you're not going to split a stock that's $160, right? When you get up into the $500, $1,000, that's usually when you split. You usually don't split at when you're in the $160 range. But I don't think the market's suggesting that Google's going to split. No. Trying to eat dog... What? Trading dog meat? No. Come on, Margaret. Bite your tongue there. Close your ears. Don't. My shepherd could be listening right now. Don't get him all nervous. No, I'm not going to eat dog meat. I like a good, nice ribeye. Trust me, in my international travels, I've had a lot of crazy stuff. I will say I tried horse in Italy, which I didn't know what it was, so I was eating it terrible. I do love crocodile. Kangaroo, by the way, is delicious. I'm a big fan of kangaroo. Anyway, I'll get to DJT in just a second. Oh, splitting up Google. Okay, I got you. I'm sorry. I thought you meant it since doing a stock split. I don't know if markets are pricing that in. We'll see what the regulatory pressures are. Again, they're going through all sorts of lawsuits. They always are. At this point, I don't see that happening, but it could very easily happen. And typically when a company gets split into pieces, they do better. So if you owned a share of, let's say you owned a share of Google at $100. I'm just making up an example. Let's say you owned it at $100. And it splits into two separate companies, and let's say they're each worth $50, you'll get bigger price appreciation out of those two than you would for the single company. So usually you get pretty good price appreciation when a company splits itself into two companies, not a stock split. Sorry, I misunderstood you on that one, Robert. I did hear chatter about that, but I don't know if that's how serious they are. I think that if you get the actual action of them being broken into two companies or more, I'd want to be long Google when that happened. I'd want to be long that company. Just based on what I've seen historically, it always seems like they do better. Thanks for the clarity on that one. Thank you, Chio. Number 18. Only 18 people? Wow, we have a few people that aren't here today. Let's see. It was Trump's latest rage about Ohio Haitians eating... Oh, they're eating the dogs. They're eating the cats. The memes that came out of that were just priceless. I loved it. Steve says, TradingView Fed funds set to monthly time frame. Oh, Fed fund, that's the key word? Thank you. No. TradingView Fed fund. I'll look at that one up, but that would be great if I could bring that up. I'd love to have the Fed fund futures in TradingView. I'm sure it's in there, Steve. Thank you. I'll look in a little bit more and see if I can figure it out. So, Michael, there was your end of year. How much time I got left? I'm going to go into this question, which I really... It's from Matthew, who put this. I believe you emailed this to me, Matthew. Yeah, this was an email one. And some of you, I think, will be able to chime in on this one and offer your own 2 cents here. But let me read this question for you real quick. Matthew says, I'm looking to grow my accounts faster than I am currently. I trade mostly the option wheel because I have a day job. My accounts are growing, but not as fast as I would like. What do you think would be a good strategy to grow my accounts faster? Or what would you do to grow your accounts faster in this market environment? Well, what I would tell you right away is more gains implies more risk. These markets have been robust since 2009, barring a couple small pullbacks here and there. They've just been pretty much buy anything and you're going to make a ton of money. So the wheel strategy, which is something I do in my 1% accounts, which is sell puts, if they get exercise, sell covered calls, and rinse, wash, repeat. It's boring, but it's actually fairly consistent. I don't know what rate of return you need to grow your account. If you are getting 1% rate of return per month, you're beating the historical average rate of return of the S&P 500, which obviously is good. Now, there's a spectrum that I would argue, if you have 0% to, let's say, 100%, and I'll just say in a year. If you're looking to, make 5 or 10%, that's not hard to do. It's actually relatively easy, in my opinion, following simple strategies. Heck, you could buy bonds and be getting yourself 5% a year. So once you get into that, I want to make 20% rate of return per year, now you have to start looking at riskier assets or leverage instruments. Well, not even leverage yet. You want to get that 30 or 40% rate of return per year or higher. Now you're looking at using leverage on leverage instruments and probably taking on more risk than you want to. I guess what you need to do, Matthew, is sit down and say, how much risk am I willing to take? What rate of return am I anticipating receiving? Now, if you write down that rate of return and you think you're going to be getting 100% rate of return per year, just go buy a lotto ticket, right? Can you do it? Sure, absolutely. Most people cannot do it consistently year in and year out. I can't do it consistently year in and year out. I have my 100% plus years. I've got 200, 300% years, sure. But to do it every single year like clockwork, I have not been able to do that in my trading career. I wish I could. Those that say they can get 100% rate of return per year guarantee, they're lying. They're lying. No way. Unless you're Goldman Sachs, and that's a different story. Jason says, just buy Bitcoin. Well, again, that's taking on more risk, right? You could probably get a much greater rate of return, but are you willing to ride Bitcoin down 60% or 80%? Given the time cycle, I don't think you have to worry about the big decline in Bitcoin right now. That's going to happen in tail end of 2025 and early 2026 is when we'll see the big sell-off in Bitcoin and crypto again. So, maybe instead of using the wheel strategy, you can augment that and maybe you look at incorporating a different asset class, right? Maybe add in futures, and maybe I would start with index futures. But again, it all comes down to having a plan. It all comes down to your entries, your stop losses, your price targets. And I think when you get into something like trading futures on an index to start, S&P or Dow's probably the easiest one, you just got to know that your stop losses are vital. With options, I think it's a little bit easier, especially if I'm selling puts because I know I'm collecting premium. I'm okay owning these securities for the longer haul. I like that option strategy a little bit better from a risk perspective. But as far as needing to make more money, what are you trying to achieve? Right? If you're making 1% per month now and you need to make 2%, okay, you could do the same wheel strategy, just go strikes are a little bit more aggressive. Or, again, start trading a different asset class. Futures is probably the most logical one simply because you can get your preferential tax treatment with the 1256 contracts. That's beneficial. But as far as saying here's a strategy that's going to get you X rate of return, don't have one. And markets are dynamic. One strategy that might work today and that's been getting 15% rate of return per year could all of a sudden fail and you end up losing 30%. Now, one thing I'll caution you on, Matthew, and others is claims that people make. So I've mentioned to you guys twice, I've used two automated systems where they were both on futures, and both times I looked at the spec sheet, the performance sheet for these futures products, and basically was following this trader's account, right? And I didn't put a lot of money in. It was just like I just wanted to test these things out. So both times with $5,000. And both times lost 100% of the investment. When I bought into that investment strategy, it was basically, okay, this person does this, here's their historical track record, all the numbers was just there in front of you. And then it literally felt like the day that I put my $5,000 in these strategies, they just lost money every single day until ultimately my account bled down to zero because it was transaction costs that ate away, and that was not included in those statements. So be very careful with the claims and statements, but I don't think that there's a way to guarantee that you're going to get a better rate of return. I would say if you want to increase your rate of return, you're going to have to go to something a little bit more volatile than doing the wheel strategy, or maybe go directional with options, since you probably are familiar with price action and price movement. Maybe try different strategies that can get you a slightly higher rate of return with options. Again, directional is being, you're probably going to get higher rates of return with directional, but a lot of times your options may expire worthless, which you don't want. In the wheel strategy, you want them to expire worthless. Let's see. Watch the body cam footage of the lady. What? No, I'm not going to watch that one. I see enough crap out there, John. I'm not watching that one. Robert said, I bought DJT $15. Now it's 20, and I'm thinking of selling it. Should I hold on till after the elections? That's on you, man. You're up 30% on your investment. I'd dump it. I mean, look, I think personally that whole shell company, SPAC creation, and company that's there, I think it's going to go to zero at some point. Even though Trump is there running it, not running it, but he's got his name on it, and he's going to pump it, I'm sure. I don't know. I don't think you're going to get it back up to those $80 levels. I'd be very happy with a 30% rate of return. I would move on. If you're going to go long-term, go with a company that has viable numbers, earnings, and people using it. The stats out there have shown that not a lot of people are using Truth Social, and that they're losing tens, if not hundreds of millions of dollars building that company. So, nope. Yeah, Big Ed says, take your profit on DJT prior to the election. At this point, you don't know who's going to win that election, although it feels like the people kind of know and markets know, but I wouldn't keep it. I'm just risk averse that way. Which chip companies do you like, Michael? Well, we did a show on this a while back. I'm actually becoming much more a fan of Intel, and just because of the amount of money they're getting, talks about splitting their foundry into, INTTC, splitting their foundry into multiple units, again, splitting, which adds value to the shareholders, and we've broken out of this range in that yellow box. So this is kind of classic that we talked about price action. Michael loves to buy into things that are just on a strong downtrend. Well, that's not the right time to buy it. Where was the right time to buy this Intel? As it started to break out of this bottom range, meaning it consolidated, went sideways, now it broke out. Then it did the retest, and now moving to the upside. It's the same thing gold did, right? You can buy the breakout, but it's risky. Safer ways to wait for a retest, buy there. This gave you both opportunities on Intel. I think Intel is probably going to continue to move up and will most likely close this gap over the next 6 months. I'll put a line right there. I don't know why this one's there, but I'll put a line right here. And what's the date today? Today is October 9th. So I'll go out 6 months from here. What's 6 months? March? No, May. May. It'll be May. And again, Robert, this isn't financial advice. It's all up to you. It's your comfort level. If you like it and you think it's going to keep on going, then hey, keep it. There's your 6 month line. I'm just going to leave that little crosshair there because I think I mentioned within 6 months we'll get above 29. I think that's where we'll be. Yeah, if you are optimistic and you think it's going to just keep on going, great. I mean, DJT's chart, I think you would agree, it's gotten a little ahead of itself. This is a heck of a pop here on something that is, in my opinion, a house of cards. So you've got, I think was mentioned on the show a few times, not only from me, but from a few others, it really just feels like it's the election play. It is the proxy for if Trump's going to win, then this thing should move up. If Trump's going to lose, this thing should go down. That just feels like what this has become the election instrument for, hypothesizing on if Trump wins or not. So this looks like people think he's going to win. Great. And could it continue to move up? Sure. But as a long-term investment, I agree with Margaret. This is not a long-term investment. This is like buying Shiba Inu. You can buy it for a short-term pop and then just leave it alone. Okay, let's talk about tomorrow. So I'm excited. Tomorrow is going to be very different. We're not going to talk trading. We're not going to talk investing. We're going to talk something that is kind of the backbone of all of that, actually, which is privacy. Naomi Brockwell is going to be on the program tomorrow, and we will talk a lot about your data, information, right? What should you be thinking about when you open up your Gmail and log in? What do you need to know about that behind the scenes? Because most people here are logging in with a Yahoo account, a Gmail, a mail.com, or Hotmail, AOL if you're still around from that era. The truth is, all your information could be publicly displayed and viewed by anybody. And I actually thought about making a movie about this where people like at Google are just going through your email and there's just stories are being created about your emails. And all that stuff is public. Not public, but public inside of these companies. So we'll talk a lot about privacy, what you need to know, simple steps you can do to protect yourself, maybe even some different services for you to use from a browser perspective, from an email perspective, from VPNs, and really look at what you need to do to protect yourself in this spying, data-rich era where everyone's trying to get your information, steal it, capitalize on it, exploit it, and get you to click here, there, and the other thing. And ultimately, they know more than you do about yourself. So that'll be a really fun show with Naomi Brockwell tomorrow. If you have anybody who's interested in security and privacy, and just, to me, one of your rights is have privacy should you want it, that will be our discussion for tomorrow with Naomi. So looking forward to that one. If you guys have any questions you would like me to ask her on the program, you can email me. Again, tradermerlin@gmail.com is on the screen, or just put it down below the YouTube video, and I'll get to all those on tomorrow's show. So thank you guys so much. Have a fantastic remainder of your day. See you tomorrow.